The biggest lie in trading is thinking you know your daily bias by marking out few highs and lows in the market. Today I will expose what your real bias is and how you can combine it with your top-down analysis to make informed trading decisions. Today you will see what the smart money really sees. I'm victorsnow from Trading from the Soul, where ICT is simplified. Like and subscribe if this helps. This is Usdjpy, the daily time frame. This trade is from 2nd October 2025. What can you see here? In my daily bias video, I talked about marking out PD arrays in the market. If you haven't seen that, I'm going to be linking it up here. I want market to come into this PD array and fail to break it. Okay. I also mentioned in the video that we should pay attention to what the market is currently doing. Can you see this? Our current daily candle close below our candle range low. Currently now, I anticipate market to go above our closing price, which it actually did, and let it fall down. Let's see. Can you see what this week right here could have been our entry from the lower time frame? Remember, our main area of interest is still this PD array. Again, this is a candle range low right here. For those that don't know what it is from our understanding of our candlestick anatomy. This is what our candlestick anatomy looks like. A candle from the daily time frame is characterized by a candle range low and a candle range high. A candle range low, which is the lowest the daily candle got to for that particular day, and a candle range high, which is the highest daily candle got to for that particular day. An opening price, which is the price the daily candle opened for that day, and a closing price, which is the level it came to close for that particular day. But when you go to the lower time frame, let's say the 1 hour, this is what you see: an accumulation, a manipulation phase, and distribution phase traders. And this is exactly how we got this trade right here. I still want price action to go below this candle range low. Actually, we can go into the lower time frames to trade from here towards this level. Let's see. Can you see a win? Can you see how market is in our PD array right here? This is our order block. And can you see it failed to break it? Candle that came into it gonna be our candle range low. I'm gonna mark a box from that candle range low towards this closing level, and I move towards the 1 hour time frame traders. Here, can you see when market came into this our order block from our higher time frame? What can you see? It's displaced up, and this is still our green zone from the daily time frame. I'm gonna be marking out a PD array from this green box to trade from. If you haven't seen our PD array videos, ICT give us 14 instructional levels to trade from. Check it out. I'm gonna be linking it up here. We have a rejection block right here. I'm gonna remove this green box, wait for market to come into this rejection block right here, and I move towards the 5 minutes time frame, completing our 3 time frame top down analysis. From the 5 minutes time frame, I want to see a change instead of delivery, which is what we'll go here. I can make an entry right here, stop loss below this level, and I target a 1:3 risk to reward ratio traders. Let's see how this unfolds. Let's see. And can you see a take profit for us traders? Which is harder in the market, finding a setup or trusting it? Let me know at the comment section. This is how this trade will look like from the 1 hour time frame. Normally, I'm gonna let some run towards this candle range high. Let's see. And can you see how market made a full take profit with these caps? Let's take another example right here. Still daily time frame Usdjpy. What can you see? An order block, a PD array. I would want price action to come back into this order block. And can you see we got it right here? I want this candle to fail to close above this order block, which will go right here. So someone watching will ask, if market should close above this order block, is it still valid? The answer is no. There's something we call displacement and failure to displace in the market. This is what my displacement looks like, and this is what my failure to displace looks like. Displacement is when price action pushes above this my PDRA and ends up closing above it. In our failure to displace, price action pushed above it, and can you see how it came down immediately? In my failure to displace right here, we are to sell, while in my displacement we are to buy right here. Since in this example we failed to displace, so I'm going to be marking out the candle range high of this candle right here, and I move towards the 1 hour time frame. Can you see that when price action came and swept this our candle range high, we had what we call a change in style of delivery right here, which a change in style of delivery simply means when market is telling us I don't want to go up again, I want to start coming down, I'll mark out another PDRA. This is what a fair value gap. I will love price action to come into this our fair value gap and we'll sell. Let's see. Can you see what price action just rejected this our fair value gap right here? I'll move towards the 5 minutes time frame. What can you see? That when price action mitigated our fair value gap, we had what a change in style of delivery, but from the 5 minutes time frame. What am I gonna do? I'm gonna mark out a fair value gap right here to trade from. Stop loss way above this fair value gap from the 15 minutes time frame. Let's see. And I will target a 1:2 risk reward ratio traders. Why am I targeting a 1:2? Because of what? We have a low right here. I could have placed my TP here, but I don't like taking anything less than a 1:2. Heading on, market just what triggered us in. Let's see. We are coming down. Can you see if our stop loss was way above these highs, we would have gotten stopped at right here. Heading on, let's see. Okay, see what it took a while for us to take profit because of what this low, but it was still if we take profit traders. Before we talk about example trade, which is very mind-blowing, give this video a thumbs up and subscribe right now. Example trade. For this example right here, what can you see? A bearish order block, and when price action came and disrespected it, it turns into what a breaker block traders, which is also a PDRA that I've been mentioning since the beginning of this video. Someone watching will say, victorsnow, what's this PDRA you've been talking about? Here are some of the PDRAs we have in the market out of the 14 PDRAs. P in PD means premium, D means what? Discount. They are simply places the institutional eye is on, places they are going to be trading from in the market. We have breaker block, mitigation block, fair value gap, our other block. Let's start with this fair value gap. Fair value gap is just an institutional gap, which is as a result of markets having an imbalance. It is simply a 3 candle sequence. 1, this is our first candle, with 2, 3 candle sequence. When the high of the week of our first candle right here and our third candle was low of the week doesn't overlap with this first candle, can you see what? There's an institutional gap right here called a fair value gap. The idea behind this is that when the institutions, because these guys are actually the people that are pushing price, when they push price to the upside, in fact they didn't come back, they came back just to this point before what's going to the upside. Can you see that? Actually they left small order right here before what's going to the upside. Some will say, Snow, will this order be enough to pump our trades? So few weeks ago, small institutional orders or liquidity left gold. One of my guys told me that if these investors actually deposited a small percent of this, that it will explode the crypto market. Institutional orders, no matter how small it looks, is very it's very important, and our goal is to trade with these guys. What of an order block? It's simply the last candle before markets moved up. This is where it gets mind-blowing. When an order block is being combined with our fair value gap, it's like a magician actually telling you where price is moving next in the market. For our mitigation block, is the level that didn't break a liquidity level before making what a market structure shift. This right here gonna be my mitigation block. Why a breaker block is what? A failed order block. Can you see? Bearish order block failed. And there are certain rules that needs to be in place before you can call a level a breaker block. First of all, it must take out a liquidity first before what? Our market structure shift traders. So if I'm gonna rate trading from each one of these guys, which I did in my PDRA video, what my fair value gap, I'm gonna give it a 4. My breaker block gonna give it a 3. My other block gonna give it a 2, because it is the most popular, but it creates dump money in the market. And what my mitigation block, I'm gonna give it a 1. This is just 4 out of the 14 PDRAs ICT gave us. So refer to my PDRA videos to understand this clearly. I went in depth in each one of these guys. Heading on, in our example here, we want market to what come into our breaker block right here. Can you see this is our candle range low and candle range high right here? And when market disrespected our candle range low, we move towards the 1 hour time frame. Can you see what the sweep of it right here and entered our breaker block? Now I need a change instead of delivery. Let's see. Okay, can you see what a change instead of delivery traders? I'm gonna need what a third candle to form so that it will complete our fair value gap. Can you see? First, second, third. I want price action to trade into our fair value gap, and I move towards the 5 minutes time frame. Can you see when price action came into our fair value gap from the 1 hour, it's made a change instead of delivery right here. We can trade from here immediately, or we can mark out a 5 minute fair value gap right here. Where will my stop loss be? Comment down below. If you picked here, you're wrong. I'm gonna put it below this 5 minutes fair value gap. I'm gonna target this candle range high as my take profit level. Let's see how this unfolds traders. I see market came and tapped us in. We are in the setup. Let's see. And can you see guys, what's a full take profit level for us traders? It took a while before it reached our take profit level. I want to mention, if this is unable to fill us in this fair value gap right here, and it go to this our take profit level, that I won't be taking this setup right here. So if you have any question about this, drop it at the comment section and give me a thumbs up and subscribe if this is helping as well. This is another example on gold from the daily time frame, top down analysis. What can you see? Comment down below. A 3 candle sequence right here, a fair value gap. But if you can check, also we have another 3 candle sequence, another fair value gap here. Mistake I see traders make is picking this one above here to trade for. It is wrong. The idea behind a fair value gap is it is where the institutions left their buy orders, right? But the banks also left their buy orders right here. Whenever you have a scenario where you have 2 fair value gaps like this scenario, you have to choose the one below this first one. Someone watching will say, victorsnow, but why? Picture this as a phone store in your neighborhood just announced a buy one and you get extra one for free still happening in their store. Can you see that? That automatically makes that store attractive for what buyers. Same as this higher time frame zone right here. It's attractive for buyers in our Usdjpy. Can you see that when buyers came into this store, they started buying? They are these guys are buying, but something happened. The phone store, actually they ran out of phones to give to the buyers that want to buy, and this went on for 2 weeks. Can you see that? Currently in that store, there are buyers waiting for this phone store to restock their phones so they can buy. As no matter how many weeks it takes, that the institutions buy orders are still currently waiting for this level, and when market returns back here, they will definitely buy. We just have to wait for price action to return back to this our fair value gap right here. This is our candle range low. Can you see when it was swept, we move towards the 1 hour time frame and wait for a change in sell of delivery. I'm gonna mark out a PDRA with a rejection block. I want price action to come back to this rejection block. Then we'll move to the 5 minutes time frame and wait for a change in sell of delivery. I'm gonna make a buy right here, stop loss below here. and I'll target a 1:2 risk to reward ratio. Let's see how this unfolds, traders. Let's see. And can you see what? Take profits, smash, traders. So if this helped, give me a thumbs up and subscribe right now. And also check out my daily buyers playlist right here and my candle range theory playlist right here, and the videos about TDA. If you want to check them out, they will be linked here as well. I will see you guys here right now.
They tell me that I'm never gonna make it. They want me to do something that could make sense.